Someone out there will want to take careful notes here because we're going to go from the general to the very specific. For the past 15 months, I've been investing $1,200 per month in Schwab mutual funds. He or she doesn't say which Schwab funds. Should I continue, or is there a better place for that money these days?
Well, far be it for me to get into more trouble with Mr. Schwab than I'm in already. But leaving aside the infinite variety of a stock of mutual funds they could be buying through any kind of a mutual fund marketplace like Charles Schwab's, the answer is yes, continue to invest. I've told particularly young people in the office who are really petrified by this market decline that it's the best thing that ever happens to them. And if you think about it logically, of course it's wonderful. I mean, think of, say, the young man I was talking to yesterday is probably 25 or 26 years old, and he's got the rest of his life in invest. And I said, well, let's suppose that Chris Scott, his name is, I said, let's suppose, Chris, that the market's going to end up at Jim Glassman's 36,000 by the time you retire. Do you want to be investing all your money when the Dow is at 35,000, or invest it all when it's 9,000? Just think about that for a minute. In other words, you want a long time to invest at low prices, and it's certainly a frightening advantage for those of us who have some money at work in the market today to think of this as a blessing. But it is a blessing because in the long run, investing depends on accumulating money at sound prices and not inflated prices like we have. I also think the general economy and the financial markets are well served by a return to reality. When you leave reality and depart from the laws of gravity, there's nothing but bad things that can happen, and the higher you fly, the more you fall. We flew quite high enough, and I think it's a blessing, maybe a blessing in heavy disguise, a blessing that we've come back a little bit toward the ground.